So I put $10,000 of my own money into four different YieldMax ETFs. A lot of people call these funds ticking time bombs, but here's the thing. For me, they've actually been spitting out some decent cash flow. In this video, I'm going to walk through exactly which YieldMax ETFs I'm holding, how they've been performing in terms of dividends and NAV erosion, and share whether this strategy feels like it's actually working, at least from my perspective. Let's dive in. So here's the big picture. My YieldMax portfolio is now just over $10,000 and it's already generated about $1,300 in dividends. That's a little over a 10% yield, which sounds strong on the surface, but keep in mind many of these positions are still pretty new. Now, one of the biggest concerns people have with YieldMax is the NAV erosion. The idea that while you're getting these big payouts, your capital might be slowly shrinking underneath. I'll show you exactly how that's played out in my own portfolio as we go through each of these four ETFs. So let's break it down, starting with my largest and most recent position, YMAX. So YMAX is actually one of my favorite YieldMax ETFs, mainly because it's called a fund of funds. Unlike most of the other YieldMax ETFs that track a single underlying company, YMAX holds several of them together in one place. Essentially, it's like picking up the whole YieldMax lineup in one stop. What also made it stand out to me were the weekly dividends. Having that steady stream of cash flow is a perfect fit for my strategy, and I'll walk you through exactly how I've been using those payouts in just a moment. For this position, I put in around $5,900, which gave me about 449 shares, and in just 3 weeks, those shares have already paid me 3 dividends totaling about $187. After US withholding tax, that worked out to about $159 net, and now if you look at my sheet, you'll notice this extra column called local tax. That's the non-residence withholding tax my brokerage automatically takes out before the cash even hits my account. I'll throw a screenshot up on the screen so you can see how this actually looks. Since this is one of my newer positions, I've been reallocating those payouts into something focused on more long-term growth. For me, that's QQQM. I'll explain this whole safety net strategy a little more towards the end. Next is everyone's favorite talking point with YieldMax and other high yield ETFs, and that is the NAV erosion. Now, if you look at my total return, which I'm calculating this as the market value plus any dividends I've cashed out, minus my principal, position comes out just slightly negative overall. I'm not too concerned with these short-term swings though. My focus here is building a long-term cash flow stream. Now let's move into my second largest position, ULTY. This is the YieldMax Ultra Option Income Strategy ETF. This is one of the more popular YieldMax funds, and it actually inspired my decision to buy into YMAX after the results I saw in my 20-day check-in video on this position. Unlike the single stock YieldMax ETFs, ULTY tracks 20 to 30 different companies which are regularly adjusted. And just like YMAX, it pays weekly dividends, big part of why I kept coming back to it. I actually started this position back in June with just $500 as a test. After the first month of weekly payouts, I was impressed enough to bump my allocation up to about $2,016 out of pocket. Since then, I've been funneling some of my dividends, not just from ULTY itself, but also other YieldMax positions, back into this ETF. If you look at this table here, you'll see that I track each purchase separately, so I know what came from fresh contributions versus reinvested income. Altogether, that reinvestment has added about $230 more to my ULTY position, so it's grown steadily beyond just my original contributions. As for the performance, ULTY has been pretty steady, usually paying around 9 to 10 cents per share each week. That's given me about $249 in gross dividends, or $212 net after those non-residence taxes. Now, my strategy for this fund is a 50-50 split. Half of it gets reinvested back into ULTY for compounding, the other half I pull out into safer long-term ETFs just to lock in some cash. So far, I've cashed out about $122, which is roughly 6% of my principal. It's like building that little safety cushion in case these YieldMax funds hit some volatility. Now, looking at the total return, this position is actually up about $190, or roughly 9.5%, making ULTY one of my better performing YieldMax positions so far. I've been holding it for about 3 months now, and I've been pretty happy with how it's delivered consistent cash flow. The NAV erosion hasn't been too bad here. I've been able to offset most of it through drip and recycling dividends from my other positions. Overall, ULTY still looks pretty strong in my portfolio, but not every YieldMax ETF has been this smooth. smooth. The next one, MSTY, is where I really learned some lessons about my own risk tolerance, and it's probably my most eye-opening position so far. So MSTY was actually my first ever YieldMax holding way back in January when I put in about $1,075. At the time, I didn't fully understand how these funds work, so my plan was simple: just reinvest every single dividend and build up a long-term cash flow. After my first two dividend payments, I even added another $700 in principal, bringing my total out of pocket to about $1,775. For the next few months, I kept dripping those dividends back into MSTY, about 5 payments in total, but looking back, that actually hurt me more than it helped. Here's why. My total dividends so far add up to about $784 or $667 after taxes, and about $483 was reinvested through drip. That makes my effective contributions about $2,250. Now, here's the problem. The current market value is only around $1,546, which means I've lost roughly $750. In other words, all of those reinvested dividends plus part of my principal have been eroded by NAV decay, and that's the real risk with these YieldMax products, especially the single stock ones like MSTY, where all your income depends on just one company. By July, I finally caught on to this pattern and decided to change my approach. Instead of dripping everything back into MSTY, I've been reallocating those dividends elsewhere. I still hold this position for the cash flow, but I just treat it differently now. For example, with my last two dividend payments, I split them. Half went into other YieldMax funds like ULTY, and the other half went into something safer, in this case SCHD. So far, I've only managed to cash out about $88, which is roughly 5% of my principal, so it's a long road until this position looks healthy again. Even with that positive cash flow, my total return is still sitting around $139 in the red, or roughly 9% down. So MSTY has been a bit of a painful lesson in my YieldMax portfolio, but it's also the position that reshaped how I approach the newer funds. Now let's move on to my final position, NVDY. Alright, so this was my second YieldMax position, and I only ever made about one purchase of $1,000. I'm relatively bullish on NVIDIA, which is what inspired me to take on this position back in February 2025. Since then, NVDY has paid me about $335 in dividends, or roughly $285 after those taxes. Early on, I was dripping those payouts back into this fund, so around $200 of dividends got reinvested. Now, if you look at my summary tables, you'll see that my initial out-of-pocket was $1,000, with that additional $200 added back through drip. With NVDY, the story's a little different. After factoring in dividends, my total return is actually up about 10% overall. That's because I've been using this extra income to offset the NAV erosion while actively cashing out some of it. About $105 so far, which is roughly 10% of my principal, has been cashed out. So unlike MSTY, this position has held up much better for me. Now let's flip over to my summary sheet and I'll show you how everything ties in. So looking at this sheet here, I've contributed a little more than $10,000 in total. Keep in mind, about $5,900 of that is less than a month old, so it does skew some of these percentages quite a bit. One positive I'm really happy with is that I've been able to cash out about $476 into other ETFs for more long-term plays. That's roughly 5% of my principal already pulled out and set aside as a bit of that safety net. As for now, the market value of all my YieldMax positions is about $10,389 compared to my $10,744 contributed. I've used quite a few of my dividends to help offset this NAV erosion, but that's still an unrealized gain, so it could move around. Overall, my total return is slightly positive, currently at about $122 or 1.14%, and as I mentioned earlier, nearly half of this portfolio is less than a month old, so it really hasn't had a chance to contribute just yet. That's why I wanted to walk through each position individually to show how things are shaping up. I've also been tracking my monthly dividend income both in dollar terms and as percent contributions. You'll notice a spike as the months go on, not because the funds suddenly did better, but because my contributions have been increasing, and that's why I like tracking this in the percentage to truly understand what this portfolio is yielding. Either way that I look at this, it's motivating to see the income trend line climbing. And if you're wondering about the money that I kept referring to that I was reallocating outside of YieldMax altogether, here's where I've been tracking it. So far, that part of my portfolio is actually up about $7.10 or 1%, which is a nice little buffer on top of everything else. I do like to monitor these positions just so I know how my money's working for me, but overall, I'm pretty happy with where things stand right now, but I'll definitely keep monitoring things in the months ahead. So That's where my $10,000 YieldMax portfolio stands right now. I'm happy with the progress so far, but I'll definitely be keeping a close eye on it. If you want to follow along with these updates as the YieldMax journey plays out, make sure to hit that subscribe button, and I'd love to hear from you. Are you investing in YieldMax ETFs yourself or just watching from the sidelines? Drop a comment below and let me know. And of course, this is just my personal experience, not financial advice. So always do your own research before making any investment decisions. Thanks for watching, and I'll see you in the next one.